Good day, Junior Tikkies. I'm Mrs. Brimacombe. In this activity, we are going to focus on all our liquidity financial indicators. When we look at our liquidity financial indicators, we ask the following questions. Can the business pay off its short-term debt without any problems in the short term? In order to control the working capital effectively, the company must ensure that there's enough liquid funds. In other words, there's enough cash to settle the current debt. When we talk about current debt, we talk about our creditors. Stock is sold in a reasonable period. Cash is collected from debtors within a reasonable period, and that is usually 30 days. Any surplus liquid funds not immediately required are invested to generate an income from. So when we look at our liquidity financial indicators, we're looking at our working capital. Our source will be the income statement and the balance sheet, but specifically in the balance sheet, we look at our current assets and current liabilities. Make sure that you know your financial statements. Know that current assets consist out of note number 4, which is our inventories, note number 5, trade and other receivables, note number 6, cash and cash equivalents. When we look at our current liabilities, it consists out of note number 9, which is your trade and other payables and your bank overdraft. It is very important that you understand exactly what goes into each and every single one of those notes. A summary of our financial indicators. We have the current ratio. Will we be able to cover our short-term debt with our short-term asset? When we look at the asset test ratio, we take inventory out of the equation and we look at, will the business still be able to meet their short-term obligations? Stock turnover rate, how quickly do we turn over our stock? Stock holding period, how long do we keep our stock? Then we look at our average debtors collection period. How long does it take us to collect money from our debtors? Average creditors payment. How long does it take us to pay our creditors? Now when we're commenting, compare the previous year with the current year. Compare the financial indicators with each other in groups. So we talk about our BFFs. If I have a look at the groups, we always group together the current ratio and the asset test ratio to see that if we take inventory out of the equation, would we still be able to meet our short-term obligations? Is the company still liquid? Stock turnover rate and stock holding period is the two groupings that I put together as well to see on average, or not on average specifically, but how long do we keep our stock and how quickly do we turn that over. And then we compare, do we collect money from our debtors before we pay our creditors, because that can have an impact on your working capital. Be aware that you could also be asked to compare one company with another to see which company is more liquid or handling their working capital more effectively. Refer to your theory booklet at all times. In your theory booklet, as well as the workings here, you would notice current ratio, explanation is given exactly how to comment and possible reasons if it's low, high, and what to recommend. For each and every single liquidity financial indicator, there's an explanation. Again, make sure that you study it and know exactly how to comment. If we look now at activity 2, liquidity, the following information appeared in the books of Pandora Limited. They buy and sell bicycles at a markup of 100% at cost price. The company was registered with an authorized share capital of 1.5 million ordinary shares. So what is required of us? Use the given information to calculate the missing figures indicated by A to E in the statement of financial position. Again, this activity, you will see how can we use financial indicators to find missing figures. This is expected of you in grade 12. Calculate the following financial indicators. So we need to calculate the stock holding period, stock turnover rate, debtors collection, and creditors payment period. Then the third question, comment on the management of stock. Quote 2 relevant financial indicators with figures in your answer. Always make sure that you quote figures in your answer. And question number 4, is the management of debtors and creditors effective? Explain, quote relevant financial indicators and or figures in your answer. This is very important to quote the figures, especially if you were asked in previous questions to calculate it. You need to make sure that you use your answers that you've calculated and use it in your commenting. You are provided with an extract from the Statement of Comprehensive Income for the year ended 28 February 2022, an extract from the Statement of Financial Position, and the additional information and financial indicators. Starting with question 1, use the given information to calculate the missing figures. So they provided you with the current assets, trade and other receivables. So how do I complete the incomplete statement of financial position? We're going to look at what information is given. So they provided us with the current ratio and the asset test ratio. So this means step number 1, I can use the current ratio, which is given to you, to calculate the current liabilities. So to calculate the current liabilities, we need to take the current assets divided by 1.8. To calculate SARS income tax, we need to look at the income tax was calculated at 28% on the net profit before tax. So they've provided us with the net profit after tax. And if I look at additional information, the provisional tax payment made during the year amounted to 126,280. So to calculate our income tax, we need to take the net profit after tax. What do we want to calculate? We want to calculate the income tax, which is 28%, and this is why we times it by 28 and we have to divide it by 72. Now we can calculate our income tax by taking the income tax payable this year minus the provisional tax payment made. So it's clear, I owe SARS more money and therefore it forms part of my current liabilities. Once we've calculated the SARS income tax, we can now calculate the trade and other payables by taking current liabilities minus SARS income tax. We now have different options to solve the current assets. If we start with cash and cash equivalents, we can now use the asset test ratio. They provided the asset test ratio 0.9 to 1. Now you should know, asset test ratio consists out of trade and other receivables plus my cash and cash equivalents. Or we take current assets and we minus our inventories. So if I want to find out the cash and cash equivalents, we can take the current liabilities and we're going to say times 0.9. And what do we subtract? The trade and other receivables. Again, before we continue, please take note. If I want to calculate the current liabilities, we had to divide. If I want to calculate anything on the left-hand side of this equation or the ratio, we have to say times. Now we can calculate our inventories by taking the current assets and we subtract the trade and other receivables and cash equivalents. Another option, we could have taken inventories and we could have said current liabilities times 0,9. So where do we get that 0,9? If you take your current ratio and you take 1,8 minus the asset test ratio 0,9, my inventories is equal to 0,9. And then we simply say 320,000 times 0,9 and it will give us exactly the same answer, 288,000. Calculating the stock holding period. You have to take your average inventories divided by cost of sales times 365. Remember, your answer must be in days. Now, when we look at average, it's always the beginning plus the end divided by 2. Make sure that you use what you've just calculated. Your inventories for 2022 is 288,000. End of last year, the figure was given to you 180,000. So beginning plus end divided by 2 equals the total 57.5 days. You could have also used an alternative by taking your cost of sales divided by 365 days. That equals per day what was the cost of sales. Then we take the average inventories, that is 288,000 plus 180,000 divided by 2, and we divide it by the cost of sales per day, and take note, you will get exactly the same answer. Stock turnover rate is the opposite, so do not get confused between the two. Here we take our cost of sales divided by the average inventories. Your answer is always how many times per year. If you take 365 days divided by the 57.5, you would get exactly the same answer. Your debtors collection period, we have to take the average debtors divided by credit sales. Please remember, sales from the income statement consists out of cash and credit sales. So make sure in this calculation that you use your credit sales. Again, average consists out of beginning plus end divided by 2. So the trade and other receivables was given to you. Alternative, if you take your credit sales and you divide it by 365 equals the credit sales per day, then we take our average debtors, which is beginning plus end divided by 2, divided by the credit sales per day, and it will give us exactly the same answer. So the debtors collection period is equal to 36.1 days. Creditors payment period, we need to take the average creditors divided by the cost of sales. Please take note, credit purchases is also used, but if they don't provide you with the credit purchase figures, then you need to use your cost of sales. Average creditors, beginning plus end divided by 2. This equals 68.2 days. So we took, again, our average creditors divided by the cost of sales The cost of sales was provided to us in the extract from the Statement of Comprehensive Income. An alternative is where we take the cost of sales divided by 365 days, and then we take our average creditors divided by the cost of sales per day, and it will give us exactly the same answer. Question 3 asks, comment on the management of stock. Quote 2 relevant financial indicators with figures. Now, you've got 6 options in the liquidity financial indicators. It doesn't mean all of them are always relevant. Here, they specifically ask about comment on the stock. So what is my options? Option 1, the stock holding period. So if we look at the stock holding period, from last year to this year, there's been an increase. This is not good. It means that we're keeping our stock for longer. If we look at our stock turnover rate, it decreased from 9.2 to 6.3 in 2022. Also, it decreased, which is not good. It means it takes us longer to turn over our stock. If we look at the current ratio, the current ratio increased from 1.5 to 1.8 in 2022. The inventory, if we're specifically looking at that, the inventory increased from 0.7 to 0.9. How do we get those inventory figures? We take the current ratio minus the asset test ratio. So this is very clear that the stock is being held for longer. There is some degree of stockpiling. It could be that the business also took advantage of bulk discount, and that's why we do have a little bit more stock, excess stock. Question 4. Is the management of debtors and creditors effective? Explain and quote relevant financial indicators. So what is relevant here? This is when we're commenting on those groupings, which I said right in the beginning of the video. We're looking at our debtors collection and our creditors payment. A reminder, make sure that you use your answers which you've calculated in the previous questions and comment on that. So this creates a problem now in a test or exam. If you don't attempt it, if you don't solve those questions, you're going to lose the marks when you are commenting, because you need to quote the figures and comment on that and compare it with the previous year as well. So what is happening here? The debtors collection period, there's been a decrease from 42 days to 31.6 days. If we look at the creditors payment, it's taking us a little bit longer to pay them because it increased from 65 days to 68.2 days. When we're now commenting on the debtors and we're specifically looking at the debtors, that is an improvement. It's much closer to the desired days of 30 days. When we're looking at our creditors payment period, we want to pay our creditors after we have collected money from our debtors. We just need to make sure that 68.2 days, what is the credit terms granted to us? Because we want to take as long as possible without incurring any interest. We don't want to pay interest for paying our creditors too late. This is also important for us to keep or maintain credit worthiness, to make sure that we pay our creditors on time. If we now compare the debtors and the creditors, it takes the debtors on average 36.1 days to pay, and we only pay our suppliers in 68.2 days. This will definitely help to improve the cash flow. Thank you very much. I hope you have a better understanding of the liquidity financial indicators. My best advice to you, the more you can practice past exam papers on these sections, analysis and interpretation, the better understanding you will have of it. Want to leave you with this quote? Life has 2 rules. Never quit. Always remember rule number 1. In our next video, we are going to focus on solvency ratios. I hope you have a wonderful day.